Welcome, everyone. Today, my guest is David Coleman, the president of MISMO, the Mortgage Industry Standards Maintenance Organization, which is a subsidiary of the MBA. He's also a 25-year veteran of the mortgage industry, including a long stint at Fannie Mae, where he served as vice president for single-family technology. We're going to talk about the evolution of mortgage tech and the potential for data standards to continue to transform the industry. David, welcome to the podcast.
Great. Thank you. Thank you for having me. Glad to be here.
Glad to have you here. You know, you and I were just on a mortgage innovation roundtable that the California MBA sponsored, and it was such an interesting conversation. And I wanted to have you on this podcast to kind of give a wider audience, let them hear some of the things that you had to say there. So before we get too far into that, I want to start with give us a little bit about your background. You have done a lot of different roles. It's one of the things I think is so interesting and gives you a different perspective is that you've had all these different ways of looking at the industry. So first of all, how did you get into the industry?
purely by accident. So it's interesting. I had gotten out of college. I worked as a stockbroker for a number of years and realized I was a bit too honest for that business. So started looking around for another position and found an entry level management trainee job with a company called Fannie Mae that I had to go look them up and figure out what they did before I went in for my interviews and whatnot. So I ended up with Fannie Mae and spent 22 years there. Moved into a vice president position, ran the group that built and rolled out desktop underwriter to the industry. And then when I left there, I went to work for KPMG for a number of years as a managing director in financial services group focused on mortgage. And then in between, I've had my own company or worked as an independent a couple of different times, all primary market, all mortgage. It's funny, when I left Fannie Mae, I was talking to someone I respect a lot about, he's like, what are you going to do next? And I said, I don't know. I'm thinking like maybe healthcare or something. And he laughed and looked at me and said, I don't think so. You've got over 20 years in mortgage. You're not going anywhere. And sure enough, I haven't gone anywhere. I'm still in mortgage and can't ever see myself going anywhere else, to be totally honest.
You know, I feel like that is that's a condition many people have, and me as well, right? Like once you get in, it's like it's hard to get out. Plus, all that expertise, you'd have to start over somewhere else. Whereas, this is what you've built upon. I had a question. When you were working on Desktop Underwriter, did you kind of even at the time understand that this was going to be a game changer? Like what a big difference that was going to make in the industry?
Not to the extent that it was, right? So at the point in time, there's a couple of generations that we went through. I think when we started off, it was really thinking about it as a desktop app because everybody was thinking about desktop apps at the time. And as I kind of found my way around the industry talking to people, I realized that being a desktop app was really not where desktop underwriter needed to be, that it actually was part of the overall process, in many ways dictated the process. And so for that purpose, started working with, came back and pulled together a team and said, okay, we need to develop a transaction to be read or written by any platform, any operating system. And they looked at me like I was, they're like, what are you smoking today? And I was like, no. We need to be able to integrate with loan origination systems and other platforms that bring DU into the overall process. And at that point in time, it was really, I was keeping track on penetration, and it was, you've heard the old notion about hockey stick adoption. Clearly was that it was. There were a lot of people that were kind of suspect, going, "Oh, it's the latest flavor of the day," and it'll be gone next year. And I think that the value was such at that point in time that it totally changed the way we thought about originating mortgages. So it pushed I'll put on my Fannie hat for a minute and said, it changed the decision, but it's really a recommendation that comes out of DU, and pushed up the point of sale so that a loan officer could sit down with a with a borrower, gather information and say, yeah, you're, assuming the rest of the documentation comes out, you're qualified. So let's move forwards. And I think that was the real game changer, is to getting that automation up to point of sale. And, it really did it. At one point in time, there was something, there used to be a fellow that did the Mortec study, and he said that, at one point in time, almost 95% of all loans were going through desktop underwriter, whether they were being sold to Fannie Mae or not. And I was like, wow, that's real penetration.
That really is, and it's just such a game changer, I think, in the way that people thought about it. To your point, when you said, "Oh, we've got to integrate with all that." At that time, that was just, foreign thinking. Now we all think, "Oh, APIs, of course, we should all, be integrated." But at the time, it's like, "What are you talking about?"
I know when I went out and looked at the first LOSs, because we were transitioning from that point in time from mainframe over to AS400, and PCs were just penetrating the industry, and that of course was the future for the LOS. But at the same time, I'd sit down and look at it and go, these are like glorified word processors that structure the text and print them out on forms, and to think about that as data that could be reused was a big jump. And so I spent a lot of time working with LOS providers to start thinking about this information as data, structured data that could be reused throughout the process. And so that was really kind of the first big step towards getting the technology and automation into the industry, I believe.
So interesting. Well, so let's see. Standardization, structure, not really a surprise then that you ended up at MISMO,
How
but
about that?
some things are a through line, right, in your life. But, tell me what was appealing about that for you.
Oh, about joining MISMO? It's for me. I tell people it's kind of coming full circle for me, because I had always, even when I was at Fannie, and then later on when KPMG ran my own business, I was plugged in with the MBA, because the MBA provides advocacy for the industry, and then I was involved in groups that predated MISMO. There was started off with EDI X12 committees. Interestingly enough, there's still a few X12 transactions floating around the industry from those days. But so I was highly engaged in that. And obviously, when I was rolling out customer facing technology with Desktop Underwriter, became important to be engaged with the other providers in the industry, and the LOS providers and lenders and whatnot. So that kept me always plugged in. And then when this opportunity came around, I was like, wow, I get to kind of step into the other side of the market, so to say, and kind of give something back to the industry, and really leverage my experience in looking at how we can help the industry moving forwards to next generations. Because from a MISMO standpoint, I mean, we're data standards, but we're also enablers, and we're also looking at how things can work together, right? And you go through it, and we're becoming more and more a forum for exchange of ideas as well. So because technology continues to evolve, and we're there as the common platform for the industry to come together and kind of decide what to do.
What do you think the biggest misunderstanding or myth about MISMO is, or what do you wish that the industry understood about MISMO that they don't?
I think the first thing, and it's not, and when I say the industry, I know someone's going to go, well, I already knew that, but so it really is a diverse industry as far as involvement with MISMO and knowledge of MISMO and whatnot. But there's a few things that I say that I am 100% confident of, and the first one being is there's not a mortgage today that gets originated that doesn't leverage some aspect of MISMO. And so, number one, to think that, oh, I don't use MISMO, I don't get touched by MISMO. Well, if you originate a mortgage, guess what? You are definitely leveraging, many, many years worth of work has been put in.
And what's an example of that? Tell me what's an example of that.
The loan, look no further than the loan application. I mean, that was the first transaction, was, getting the data from a loan application. And then you had other transactions that were just using that same loan application. Why? Because it had structured data that was available that they could be using for, whether it's, getting mortgage insurance or requesting credit or you name it. I mean, it's the same structured data, and they had the reliability of it plugging in.
I love that. I feel like one of the things we talked about at the Innovation Roundtable was appraisals and the fact that, the government is looking to make that process much more standardized so that we can get more standardized data from there. What do you feel like that's been a pain point for some people, but obviously there's huge opportunity there. When you think about having a more, standardized set of data to work with on properties, what do you think?
Um, wow, you're asking me to tiptoe into some hazardous waters right now. So, because anyone that's plugged in is well aware that there is this conflict underway right now between, getting a full appraisal for every single transaction because it provides, safety and wherewithal and validation and stuff versus, we'll call them desktop or AVMs, and the value that they provide. And so, I do think that MISMO is in a perfect position to do a couple of things. First thing is make sure that the data that we do decide to collect around appraisals is common, so that when I send you a transaction, an appraisal transaction, you've already got it mapped and you can add it to your system and you can apply whatever rules to it, or if you want to put it on a piece of paper, call it a form, that's great, or whatever. It's standardized, but at the same time, provide a forum to have open discussions around, between, appraisers, appraisal management companies, lenders, technologists, the whole deal, to say, kind of what does this continuum look like? Because, I think there's some that will argue that you don't need an appraisal on every property, or that something less than a full appraisal is totally adequate based upon, the valuation or the risk or the last time somebody looked at the property or the amount of information that Google's got on it, as an example. So, I see us providing kind of the data standards, but also process standards, and then, kind of a forum for discussing kind of what, who's going to use what, when, and how they're going to use it, type of thing.
Yeah, I think there's so much there potential wise. And, the different people I've talked to have said that, even the new options, most of those are going to cannibalize what have been appraisal waivers. They're not going to have, this sweeping effect on whether a full appraisal is done at least at this time, right? Because still right now, with and we talked about this in the roundtable, the fact that lenders don't know who they're selling the loan to when they start, they're like, well, I know that, Fannie and Freddie are okay with this, but what about other investors? So, the flight to safety there is like, oh, I just do a full appraisal on everything so that I know I don't have to redo it later. So it's going to be interesting.
And the key thing is what's the value of that appraisal on the transaction. So, and only people taking the risk can actually say that. So, you hesitate to put the words in their mouth or tell them what they should or shouldn't be doing. But just recognize, we got an evolution. We're evolving as it's related to, valuation and appraisals and whatnot.
Let's talk about the larger evolution, in tech that's not just, in our industry, but obviously affecting our industry with both AI and machine learning, which have been around for a while, but what people think of as AI has definitely changed in the last year, just kind of, as they get more hands-on, maybe individual experiences with it, right, through ChatGPT or whatever it might be. But it's been around for a while. What do you think, from your perspective, looking at our industry with AI and ML, where are we compared to other industries, and what do you think we're doing well there?
That's a good question. I mean, because clearly AI, there's a lot of interest in AI and machine learning, and there are different ways to use machine learning and AI. I think from an industry standpoint, we've got, over in the corners, we've got people that have been working in this space for quite a while. We've got others that are new entrants. But I think as an industry, here's a couple of things that we need to be thinking about first. And first thing is the vocabulary, because you can go ask the same person ask different people the same question related to AI, and chances are you're going to get a different answer every time, because people don't know what they don't know, I guess, or they haven't been exposed to the variations. And it also goes for machine learning and the definitions of machine learning and how it's used. You've got machine learning that learns as transactions are coming in. You've got machine learning that mines data and goes and hits large stores of data and comes up with different views of it, whether it's rank ordered or whatever. But these are areas where clearly, if you want to describe AI as being a business rule system, which some people would, that goes all the way back to the mid 90s. If you want to talk about machine learning, well, a lot of the statistical evidence that was put together to allow the creation of automated underwriting was, an old manual style of machine learning, for lack of a better term. It wasn't dynamic, wasn't real time. We've evolved, and it's we've got expertise in different corners. I think that, based on my experiences, we have not seen as much discussion as we have in the last 6 months. And there's a call for, we're actually going to be looking at, as part of the upcoming MISMO summit in September, to carve out at least a day for some in-depth conversations around AI and what is important to the industry and what they need out of it, and where the guardrails should be at, and where the fears are that you've got coming out on both sides of the equation.
I think that's so interesting. Like as a consumer of technology on the consumer side or even the business side, it's not clear to me. I know what the difference is in theory between AI and ML, but if I'm using some application or if I'm interfacing with something, it's not like I can tell, oh, this is ML and this is AI, and I would be able to tell you what that looks like. And really, I just care about, like, does it work? Is it fair? Does it make it better? Is it more efficient? That kind of thing.
Yeah, no, I think the thing that most people come in contact with, first of all, are these little chatbots that sit on all the websites, and I think you can, if you go mess with them, you can find that there are limitations, and they'll get to a point where it's like, oh, we need to have you talk to a real person, or whatnot. So that's the first exposure. But then you've got some of the ones that are getting pretty, like the chat GPT is like one where it's like, you can get into some fairly deep types of questions that will come back and give you a lot of good information. I think the key thing is you have to also, if you look at the bottom, they all have disclaimers going, like if you ask it a medical question, it comes back because I'm not a doctor, but or if you ask it, to pick a stock for you, because I'm not a financial analyst, but so they are still kind of caveating, the knowledge, because it's only based on the amount of data they can get to and put together all at once. But I think from an industry standpoint, we're going to find that there are other ways to use it. You put the appropriate guardrails on it, and use it to, say, monitor someone filling out a loan application online, and knowing that based upon what they've put in this field, they probably need to put something in this other field over here, or that they've got two fields that don't really make sense. Like, you couldn't have been working at McDonald's and overseas at blah, blah, blah on the same date, and, it's a step beyond edits, right? It's a smart way to look at what's going on. So I see where there are things that may be, closer versus far away as to what we can do with the technology that we have today.
One of the stereotypes of some of the tech solutions that we have in mortgage or housing in general, and if you read the founders, like the origin story of the tech, it's like, I tried to, I applied for a mortgage. I felt like it was an inefficient process. I realized I could make the process so much better. Or sometimes they even go so far as to be like, this was so antiquated and no one's doing anything. And, and then they get into it and they realize it's harder than it looks. And there's actually been a lot of tech innovation the whole time over the last, 20 years, just like other areas. They just it may not be obvious to the person who is filling out the application. When you look at it, and I mean, here you are, one of the, somebody who worked on some of the most important tech. When you look at it, what part of the process has been least touched by technology, or might still have a lot more innovation to go, in your opinion?
Let me answer that question a different way around. And that is, I can show you today that all the technology that you need to fully automate the mortgage process from origination through closing exists today for a majority of mortgages. So what that's saying is that, I can go in, do an app, and it will fire off whatever's needed from validation, verification, transactions, build all the transactions it needs, run it through, pretty much position it for closing in an automated fashion for probably 70%. I'll throw that number out there of all mortgages. Now, the problem that you run into is not so much the technology as the people that run the mortgage company or the mortgage office or the origination facility or whatever, because they are looking for silver bullets and 100% solutions. And we have never had, and I would guess that we will never have, a 100% solution that's going to take care of everybody. So there has to be this recognition that that is the case, and that they're willing to go invest in what I call a bifurcated process line, where you interrogate it up front and you're able to run your what I call a straight through mortgage all the way through the process in an automated fashion for some percentage of your loans, and then recognizing that you need to upfront or anywhere within the automated process be able to kick it to a human being that the technology is not quite ready to respond to. But I think the problem is that while the technology is there, the adoption cycle is probably not up to speed with where it needs to be at. So, I kind of challenge the industry to start thinking about when they answer questions, instead of saying, oh, well, let's hire 3 more people and fill out 1 more form, to start looking at it going, gee, that's how can we automate that? How can we plug that into our existing process today? So that's the challenge I kind of throw out.
I think there's also, adoption is just so key. We talked about that at the Innovators Conference, that like you can have the best tech available in the world. You can have all of it there. If your top producers don't use it, you're kind of stuck, which I thought it was just so interesting. We had such an interesting conversation of people going, I didn't know that was an option, right? Like if you're at Fannie, if you're in the, if you're in the military, if you're I mean, there's lots of places where like, you don't get that kind of option. But when you're running a mortgage company and those top LOs are sort of like, the top salespeople, they get to kind of run things. It obviously depends on the company. Some are structured that way more than others. Was that surprising to you?
No, not at all. I mean, it's half as bad as the LO. I mean, because LOs do business the way they want to do business, right? So they're the rainmakers. They're bringing the people in the door. If they feel like writing it on a yellow pad and handing it to a processor to have it put into the system, that's what they're going to do. And as a competitive lender, chances are you're not going to stop them from doing that if they're bringing the business in the door. But I think that they're missing an opportunity, because if you are using the right technology, and I think, just back to your AI questions, I think it may make it easier for LOs to do an interview session with someone and have it, populating, everything that needs to from an app, put it in the right places, so that all they have to do is flip it around and walk through it, and they're done. And that could entice some of them to move to the technology. But there's others that are they love the technology because I put it in. They're able to tell a borrower, okay, absent anything else, you're approved. Good to good doing business with you, and it stops them from going out to shop around, because they know they're locked down and life's good. And so that's the big thing, is they want a borrower wants comfort. They want a good deal, reasonable deal, and they want comfort of knowing that it's going to close.
That's so important. And I think that everything in some ways should be around efficiency and around what helps the borrower, right? Because if you have those two things, it's helping the borrower and it's helping the lender stay in business, or, whoever it is, not just lenders, right? And that's really the goal. Well, give me your pitch. Why should people be more involved in MISMO, right? So, this is an organization that serves the industry. What, from your perspective, should people do more than they do?
First thing is MISMO is a forum, and it's a community of individuals that come together from the industry to exchange ideas and to learn. As an example, we had our spring summit, and we had over 310 attendees, which from a conference standpoint is a pretty good attendance level. But within that, we had we had representatives from all of the major federal agencies. So you're looking at VA, FHFA, HUD, FHA, AG. You had attendance from the state regulators. You had attendance from all of the, not all, but most of the FLUBs. You had, over 25 lenders in attendance. I know I'm missing more to generalize within that group, but first of all, you do step into a community where you've got instant access to, a whole host of people that are smart and know a lot of things. And because it is a community, everybody takes off their competitive hat when they walk in the door, and they're there to solve the problems of the industry. And, I've yet to know anybody that's from MISMO that I reach out to, and they're not willing to take, they'll take my call, they'll share information, they'll work with me on solving a problem. And it's the same way, not just me, but, across all of the participants there. So, you do get that you don't get anywhere else. The second thing is you get access with the summits, you get access to, the key minds within the industry. Like we had a panel session that had someone from FICO, someone from VantageScore, someone from FHFA, and the GSEs talking about credit scores. It's like you don't find an intimate panel like that anywhere else that I know of that kind of covers it all. You see one here, one there, one over there, but you don't see them all together. So you do get access to to information on a regular basis. Third thing is within that, you get to influence the industry, and you get to identify what the priorities are, what's important to you, help to shape data and requirements, help to shape processes, and also put together feedback that goes back to those that are putting it out. So it's a good forum to get the word back to Fannie and Freddie and to the to the federal agencies. And then last, it's an educational forum as well. So I mean, you don't just we've got groups, we've got communities of practice, we've got work groups that look at setting standards, putting things together for the industry. But we also have a boot camp, and we also have educational pods that provide education on various topics across the industry. So you do have that as kind of a central location. I've got an example. I've got one of the states, a very large state, that is sending a lot of the members of their regulatory function to boot camp at MISMO so they can get up to speed on what's going on in the industry, so that they can serve their clients better. So it's it's interesting how it all comes together. So and I think it's it's one of those types of things that all players in the industry should look at having a representative at the MISMO summits, and should be a member of MISMO to participate in all these things.
Given all that, David, how can people get more involved?
I tell you what, first step is to go out and visit our website, which is mismo.org. That's where you can join MISMO. You can become, we have different levels of support for MISMO. We call them champions. And with the different champion levels, you'll get different levels of access, as well as publicity in our functions with signage and website and whatnot. Also talks about sponsorships. So if there's topics that you would like to sponsor, those are available. But I think if you're still kind of trying to figure it all out, the best thing to do is come to Washington, D.C., September 18th through 21st of this year, and join the MISMO Summit, where you'll get a chance to experience everything. We have pretty good lineup that will be available. You'll be able to see the lineup on the website mid-July. But that would be the best place. I'd love to see you there. If there's anything I can do for you, in the meantime, please feel free to reach out to me, as well. I'm can I give my email address?
Yeah, absolutely.
Okay. Please drop me a note. I'm at dcoleman, Coleman, at mba.org. And I'd be happy to share even more with you. So it's been great to be here this afternoon. Thank you very much for having me.
David, it's been a pleasure. Thank you for getting on, and we will see you soon. Thanks.
Okay, great. Thank you.